Hi there, welcome to Neppy Adverse. Very excited to bring you this video because I'll be giving you the ASX stocks that I'll be watching during December 2020. It'll only be part one of a three-part series just because there are quite a few companies I'll be watching next month. And in fact, I think quite a few of those companies I'll be watching into 2021 and potentially even beyond. So let's get stuck into the first company I'll be watching in December 2020. And that company is Strategic Element. So I actually didn't really know much about this company. Even now, I don't know a lot about the company. I have done a little bit of research, but this company really got onto my radar on October 27, 2020, simply because it had a classic breakout. And a classic breakout is when we see the share price rise on massive volume, and we saw that definitely. So the share price rose by 137%. On massive volume, so over 150 million shares were traded when the average was a few million here and there. But we also had a sign of a breakout in June of this year too. So June 23, 24, when the share price rose 18% one day, and the next day it rose 22%. But that was a first sign, sort of a harbinger of potential future breakouts, and we definitely saw that future breakout on October 27. So because I don't know much about this company, I thought I did a little bit of research. If I don't know a lot about this company, there's probably a few people out there watching this video who don't know much either. So the ticker code is SOR. And Strategic Elements act as a pooled development fund. So hands up who's heard of a pooled development fund before. Sometimes known as a PDF. So not quite the PDF most people know about it, but a pooled development fund is a sort of a government initiative that tries to encourage innovation and investment into Australian firms. So I really like that sort of initiative because I believe that we're in a way neglecting innovation. In fact, in my opinion, our focus on dividends as a country is in a way hurting innovation. That's a whole different video. Anyway, so they also class themselves as a venture builder, and a venture builder just combines teams of scientists or leading scientists and innovators to come together to build projects. And one other probably exciting thing about a pooled development fund is it's tax-free. So any capital gains or dividends are all tax-free for the investor. I even think for Strategic Elements there's some tax incentives for them, and that's also a government initiative to help promote innovation. So what were these two announcements that led to these breakouts? So typically breakouts are created or induced by fairly significant announcements. So the June 23rd announcement was something to do with autonomous robotics technology. But the big one, the one that got the market excited, that got me excited. In fact, I saw this rise and I looked at the announcement and I went, flexible self-charging batteries. What? That sounds amazing. So just because it sounds amazing doesn't mean anything's going to come out of it, but the market liked it. It's probably just like me. It was like, wow, that sounds amazing. And the fact that it's a collaboration with the University of New South Wales and CSIRO, two really fabulous Australian institutions, that's not a bad thing either. So if they can get this moving forward and create something valuable here, that would be fantastic for everyone, because a flexible self-charging battery sounds amazing. So the second company is Appen. The ticker code is APX. Market cap of 3.8 billion. Operating cash flow positive. Lots of revenue. So it ticks lots of boxes. So Appen, for full disclosure purposes, I've owned this company for a long time, 4 or 5 years or so. And it's within my long-term growth portfolio. So any company within my long-term growth portfolio, I don't follow too closely. I just let it ride until the story changes. And in Appen's case, the story hasn't changed. Still a lot of potential growth moving forward. But the share price can be quite volatile. I can see share price got as high as $44 in August, then pulled back all the way to $31 in a very quick time. And that $31 is a price of support. And as soon as it got to $31, it bounced off it. And we're right on $31 again. So we're right at that price of support. And the share price could do two things moving forward over the next few weeks. It could bounce off $31 and go higher, or it could go straight through $31 and that price of support will become price of resistance. And if you actually go into the past even, if you go all the way to 2019, around July or August, it reached $31 and bounced off it to the low side. And then it did it again in May of this year, and then it bounced off it again. And then typically when you get a price of resistance, it needs to go through it quite quickly for it to become support. So usually prices of resistance become prices of support if the share price goes through it. So for those who don't believe in technical analysis, don't believe in resistance support, this is a perfect example that it has happened. In fact, we've seen this $31 share price act as resistance once, twice, then it went through it, and then it's acted as support once, twice. So it is real, these sort of things, they do exist, and it's all about psychology. When, say, a trader sees a price getting towards a price of resistance or a price of support, that's when they're more likely to buy or sell. And the reason I'm interested in Appen is just to see what the share price does moving forward. In fact, there is potential I might buy another little parcel to add to my portfolio, or I just wait and see what happens. Next company is Northern Star. So this is a company I really like, just because they provide a really good example of what a breakout can do, or what a very smart acquisition can do. So they acquired a gold mine in 2010 when the share price was something like 5 cents. And you can just imagine our share price then was 5 cents. If you held for 10 years, you would have made a lot of money, because share price now is $12.85. Anyway, this is a weekly chart that goes back 2 years. And the reason I'm showing you this is the share price right about now is right at a moving average of support. So the 100-week moving average is a moving average of support, because it's hit it twice in late last year, November last year, and during the COVID-19 panic, it hit it again. And it hit it again last week, and it's bounced off it quite well in the last few days. So again, it may have been acting as a moving average of support. But the Northern Star share price is highly correlated to the gold price, and I don't know what's going to happen to the gold price moving forward. So there's a lot of bulls out there, a lot of bears in regards to the gold share price, because Northern Star's share price is highly correlated to the gold price. I'm going to stay clear of this one for now, just because I think there's a lot of potential there for the gold price to go either way. And probably the other factor here is, so it's hit that price of support in the long term, but when you look at the short term, so that was weekly moving averages, this is daily moving averages and daily support. So it's actually moved through a price of support through it, and has potentially bounced off it to go to the low side right the last few days. So in fact, at the $12.85, which is the price of now resistance, we could see that act as more resistance, and the share price could go lower, if that makes sense. So we've seen the share price come off a lot in the last few weeks, from $17 all the way to $12.85. And moving forward again, I think the share price, or the gold price, is going to be very important to what happens with Northern Star's share price moving forward. So I'm going to stay clear of this one, but this is a company I'll be paying close attention just to see what happens with the share price, because I think the gold price is going to be highly correlated to how well the overall stock market does. I think there's going to be some sort of negative correlation there, and it wouldn't surprise me to see a bit of correction in the stock market. We are seeing very lofty valuations in the stock market, and if we saw a bit of correction, we might see the gold price start going up again. It's only potential. It's very hard to know what the future is going to hold. The correction, I think, might happen, might not be for another 6, 7, 8 months, might be enough for another 2 years, don't know. Vista Group. So this is a company I've been following for a long time. So all the way back, it reached about almost $6 in the middle of 2019. So Vista Group, for those who don't know, they're into software solutions for the film industry. They give software solutions to film theaters or cinemas, film studios, cinemas, that sort of thing. And then from about the middle of 2019, we saw lots of negative things happen to the share price, some profit downgrades, bad things happened. And then during the COVID-19 financial panic, the share price, of course, collapsed because they offer film solutions or software solutions for the film industry. The film industry literally shut down, so they weren't getting any money out of the film industry. And then ever since then, we've seen the share price go sideways or slightly upwards, reach as low of about $1. It's now $1.67. But if you look at the shorter term share price action, we've seen potential turnaround showing up the last few weeks. Share price has gone above the moving averages, and looks like the moving average is starting to swing upwards, which is always a sign that we might be starting to see the development of an uptrend. The initial stages of an uptrend. That's when you really want to get in, when you see the initial stages of an uptrend. So that's why I'm interested in VGL or Vista Group. Market cap's 382. They do a little bit of revenue and they are operating cash flow positive. But there is a lot of uncertainty moving forward, I think, with Vista Group because, for instance, they do provide software solutions for cinemas, and how well cinemas are going to rebound during the recovery, I'm not sure. Whether people are going to go to booked out cinemas, full cinemas, I'm not quite sure yet. Personally, I hate going to full cinemas. I rather go to when no one's in a cinema. I rather have the whole cinema to myself. So I like the experience of watching a movie on the big screen, but I don't like watching the movie on a big screen with all these strangers who are eating chips and making lots of noise. Anyway, that's just me. So why am I showing you uranium? So there's a lot of people out there who refuse to buy mining companies. I sort of understand it. They believe mining companies are price takers, they're not price makers, and that immediately precludes them from buying. But the fact that they're price takers means they are, highly influenced. Their share price, how well their company's doing, is highly influenced to the underlying commodity that they're mining. But that makes it easy because all commodities go through cycles. So you have uptrends, downtrends, and all that. And if you can time the uptrends and downtrends, you can do fairly well out of buying and selling commodity and miners. So uranium has been in the doldrums for a long, long time. But it has a history when it goes parabolic. When the share price goes up or the price of the commodity goes up, it can be quite parabolic or even exponential. We've seen the potential uptrend developing. I've just got that as the red line. So over the past few years, about 3 years or so, we're potentially seeing the uptrend develop. And I got a price of support there, which was a price of resistance around $29. So it's $29 US a pound. Went through it quite quickly, and that was because one of the mines in Kazakhstan, I believe, shut down during COVID-19. So the supply of Uranium E was even lessened because of that mine shutdown. Prices now moved towards that price of support and is right on it. So very important times right now to see what happens with the price of uranium. But in any case, I'm very bullish on the long term of uranium. I think this is one of the commodities that I think will have a long-term viability, long-term future. We might see a rapid increase in uranium prices. We are definitely seeing demand going to outstrip supply in the future with uranium. So I'm showing you this because the next company that's on my watch list is Peninsula Energy. Ticker code is PEN, market cap of 70 million. Do have a little bit of revenue, but the last last year, they were operating cash flow negative. So Peninsula, they do have a project in Wyoming, so they're actually in a good location. And they are transitioning to a low pH recovery process, and that low pH recovery process is a low-cost solution to mining uranium. In fact, all the low-cost uranium miners have a low pH recovery process, I think. So this is the long-term chart of Peninsula Energy going back to 2016. You can see the share price going down from about $1 all the way to 8 cents recently. So there's no reason to buy in just yet, but we've seen the volume, you can see the volume on the bottom there, really pick up in the last 6 months or so. And one of the reasons it picked up, there was, if I show you the short-term graph, there was a capital raising about 6 months ago, a highly dilutive capital raising, which were at a massive discount too. So I think it was about something like 6, maybe 5, 6 cents, something like that. and the share price at the time was 12, 13 cents. So a massive discount, highly dilutive. But it got rid of all the debt. So they had a bit of debt, something like $10 million of debt, and the interest on the debt was quite high. And they do have some contracts, so they have to provide some uranium. So they do have some cash coming into the door. But what's got me excited in the last about a month is that it looks like the share price is turning around. Looks like we potentially are seeing the start of an uptrend developing, and we're starting to see the volume increase too. In fact, if you go before that, before we started to see this uptrend, we saw a lack of volume or very low volume for about a month, which is a really good sign. When you see a low volume, that means the supply of sellers is draining out, and that means the supply of sellers is draining out. The share price probably won't go much lower, and all it takes is some buyers to come into the action, and that's what we've seen over the last about 2 or 3 weeks. Is some buyers have come into play and they're starting to buy Peninsula, and that's just driven the share price up from about 6 cents all the way to about 8 cents or so. So this is uranium play. I actually am starting to buy uranium companies. I wish I could buy uranium ETF, but I'm doing the next best thing and just buying a few uranium companies here and there, and Peninsula will be one of those companies eventually, because I think in the long term, uranium is going to be a very good thing to have in your portfolio. That's just me. You don't have to follow my suit. So those are 5 ASX stocks I'll be watching during December 2020. Only 5 of about 15 or so. So I'll do part 2 tomorrow and then part 3 the next day. So I hope you've enjoyed this video on these companies I'll be watching during December 2020. If you've enjoyed this video, leave a comment. If you didn't enjoy the video, if you think I can do something differently, leave a comment. Otherwise, I'm not a financial advisor, so even though I'm telling you what I'm watching, what I'm doing, that doesn't mean you have to follow suit. It's not advice. It's just trying to give you some ideas so you can maybe do your own research and whatnot. If you do need some professional advice, make sure you seek out someone who is qualified, and maybe they can help you through your own financial circumstances. Otherwise, have a good day, and I'll talk to you later. Bye.